Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. When we talk about the markets, the Nifty managed to close above the 19,800 mark for the first time since October 17 in yesterday's trading action. The surge really came in the final 60 minutes of trade when the index recovered about 100 points from the day's low as well. We also will be telling you about all the markets, but first up, let's track the top market headlines this hour. To upward trend on Thursday as investors rejoice the further drop in US 10-year yields and traders grapple with the weekly expiry on Nifty. Pharma, metals and auto stocks may shine further. Caution is advised in the wider cash market. Stocks and sectors are unable to negotiate a higher trajectory as new investors fret over surging valuations while older ones book partial profit. Good morning to you, Shail, and thanks a lot for joining in, and good morning to all our viewers joining us this morning. Well, Shail, the Nifty continues to edge higher even as the trading range really continues to remain in a narrow band as well. But with yesterday's move, the Nifty is now up nearly 1,000 points from October 26, from 18,837, which was the October FNO expiry session. What do you really expect on the Nifty now?
Good morning, Sakshi, and a very warm welcome to all viewers who join us from different parts of the world. Sakshi, we are having a flat to consolidating week as far as the Nifty is concerned, and the previous 5 sessions show it to you on the screen. Now, the issue here is that we've moved well into the election week, and till December 2nd, most likely you will see very small minor ups and downs on a net basis on the Nifty, but that does not reflect the volatility that you see intraday. If you look at the intraday graph of the Nifty yesterday, there was a 100-point movement either way, from a high of 19,820 to a low of 19,715, and from then on it went on again to close somewhere like 19,811 up 28. So while the net change is just 28, the volatility in the market is huge, and that gives opportunities for intraday traders to buy the dip. And why should dip be bought? That's because you have a lot of strength in the Nifty. Sakshi, if you see the previous 5 sessions, the net advanced decline ratio for the Nifty for the week is 34:16. That means 2:1. For every stock that lost ground, 2 have gained on the Nifty on a net weekly basis. That is previous Thursday to this Thursday. And in the month of November, so far in the FNO expiry, 48 out of 50 Nifty stocks are in the green, and very, very strong movement is seen in Pharma, in auto, in IT, in life insurance space. Everything is buzzing. So the last 5 days have been flat, but overall the month of November has been very, very strong. As you rightly pointed out, a 900-point rally on the Nifty from the day's low, from the FNO expiry's low of 18,820 to where we are now, 19,811. Plus the fact that the mid-cap Nifty has actually run up 3,600 points, 9% mid caps on the index have rallied. So this kind of phenomenal move points to a bigger picture in the coming month, and this is when FIs are net sellers, Sakshi. So people must understand the kind of inherent strength the Nifty is exhibiting, and once this consolidation zone is over, you are likely to see further and better highs in the Nifty. Of course, much will depend on December 2nd, which is the exit poll, and of course the results of the 5 state elections. But overall, the picture for the Nifty is very, very strong. Successive higher levels are seen on support, which is now 19,700, 19,800. Very, very strong moves are likely in the next week. Today is going to be a flat day most likely. And one more thing I wanted to point out, that Monday is a holiday. Therefore, this is a holiday shortened week, and options premia will therefore shrink faster. Time decay will be very quick in this particular week. So this is what needs to be kept in mind. And liquidity actually for this particular week has been moving towards the 5 IPOs that we've analyzed so well. Therefore, you see this slight consolidation trend, very, very strong supports and very, very strong resistances, but better days are still ahead. Sakshi.
Right, so better days are still ahead. Let's now talk about the wobblier of the two indices, the Nifty Bank now, which continues to look more volatile between the two indices. The index even yesterday fell about another 250 odd points on the weekly options expiry session. It closed below 43,500, and this is for the first time after November 3rd. Will Nifty Bank remain a key hurdle for the Nifty's next move towards 20,000? I want to ask you, Shail.
Sakshi, even in Bank Nifty, we have been sort of made so, how should I say, thankless by the market. There is even on the Bank Nifty a 2.3% rise in this particular expiry in November so far, and from a low of 42,450, we are at 43,450. So net is 1,000 points. But over the last 5 sessions, the index has lost ground. So overall, the picture even in the Nifty Bank is not so bad. 2.3% higher in a month is phenomenal. But like I said, we've been spoilt for choice. You've seen a 5% rally on the Nifty, a 9.8% rally on the Nifty, Midcap Nifty. Therefore, 2.3 looks very bad. But if they were normal months, you would have said, इस महीने भी निफ्टी बैंक ने 1000 पॉइंट आपको नेट बेसिस पर दिया है. So this is what the situation is. Yesterday the most important thing happened. The 200-day DMA was tested intraday and the index closed above that. That's a positive. You have very, very strong supports at 43,300, 43,500. It's the fresh weekly expiry of Bank Nifty that takes root today. Again, a truncated holiday, so truncated week, therefore options premia will squeeze further, and one has to probably, as far as the Nifty is concerned, buy the intradip towards support 1, support 2, but Bank Nifty, let's leave it for far more better professional traders who can play the intraday move. But for me, Bank Bs, as far as the Bank Nifty is concerned, it's an ETF, and SBI ETF Nifty 50, those have been accumulated this month for my long-term portfolio, and they are working very well.
Okay, so ETF's a great way. From the FNO space, Shail, what should investors be watching out for? Any particular stocks that are on your radar too?
Well, Sakshi, so many of them, and first and foremost, let's look at Balrampur Chini. This is something that we had analyzed in the dying moments of yesterday's trade. Very, very strong bullish setup coming in Balrampur Chini. This is of course from the FMCG pack. As far as the overall picture for Balrampur Chini is concerned, it's accompanied by a 3.1% rise in open interest and of course a 3% rise in price. So this is something that needs to be looked at. Within the sectoral rotations that are happening, money is moving into sugar, and Balrampur being the best and the strongest balance sheet, this is something to be looked at. 463.15 is where the futures shut shop yesterday, and the delivery statistics were fairly modest, up 19%, but this is probably the beginning of a smart trend in the sugar space, Sakshi, led by the market favorite Balrampur Chini.
Right. Balrampur Chini will continue to watch out for that. Let's also look at what the global cues have indicated for the market opening today. The Wall Street saw a rally ahead of Thanksgiving holiday, with the benchmark 10-year Treasury yield also falling briefly to its lowest level in 2 months. We did see the Dow Jones gaining about 0.5% in trade, while S&P 500 rose 0.4% in trade. The Nasdaq ended with gains of 0.5% higher. Remember, in the month of November so far, we've seen that the Nasdaq is already up 11%. Dow is up 7% so far, and the US 10-year yields have cooled off to 4.36% since lowest level since September of 2022 too. So that's going to be important to watch out for. As far as the Asian cues are concerned, most of the Asian markets opened on a subdued way despite the rally on the Wall Street. We are seeing a mixed action right now, about 0.3% surge for both the Nikkei and the Kospi. Hang Seng is slightly down in trade, about 0.1% lower. Shanghai is, however, up by 0.2% as well. Now, in terms of the foreign flows as well, we've seen that the foreign institutional investors have net sold shares worth 306 crore rupees. So they continue to remain in the selling bands. The domestic institutional investors bought about 721 odd crore rupees worth of stocks on November 22nd. What's also be very important will be also to track all the IPO action today, with all the 5 IPOs now open this week. Tata Tech IPO got subscribed 6.5 times on day 1. IREDA IPO got subscribed 4 times on day 2. And in fact, 4 out of these 5 IPOs have already got oversubscribed on day 1. So substantial gains coming in. And perhaps, that's what we saw getting reflected, Shail, even yesterday. Money was coming out of the small cap space and people were investing money in the IPO space. Small caps, which had been on an uptrend, were seeing a decline yesterday.
Yes, Sakshi. The point I'm trying to make is that we've seen a wobbly week this previous 5 sessions because of these 5 IPOs. And honestly, the quality and parentage of at least 3 of these IPOs is phenomenal, backed by Tata Group, which is Tata Technologies, backed by the Government of India, which is IREDA, backed by Federal Bank, which is at a record high, which is Fedback Financial Services, and even the other 2 IPOs are not aggressively or adversely priced. So it is a fair point that money is moving into this because you have a short-term rally ahead in December, and given the way Nifty is moving, these IPOs, at least 2 or 3 of them are going to list at a substantial premium. So one understands, a sideways to flat to an upward consolidating trend in at least the Nifty. And this is where the money is. The good part, Sakshi, is that the US 10-year yield, as you had pointed out, is now at its lowest since September 18th. And that's a very, very big plus for global sentiment. It is only a matter of time that FIIs will return to Indian bourses after making a super normal money in Wall Street. Even the US markets are up 10%, Sakshi. So you book profit there and move back into India. That is the trade that is going to be most likely there in December and January. Sakshi.
Absolutely. We'll now go to our guest of the day, Ashish Kapoor. He's joining us, CEO Invest Shop. Very good morning to you, Ashish, and thank you so much for taking the time out. Where are you deploying fresh money? Is it in the primary market? Is it in the secondary markets? Are you looking at ETFs like how Shail is pointing out? Where exactly are you putting in fresh funds?
Well, I mean, I would have liked to buy the IPO, the primary market, but really speaking, practically, you're not going to get much of an allotment because the way the quality IPOs at least are getting oversubscribed, it will be very, very difficult to get any sizable allotment unless you can deploy very large funds or leverage. So yeah, of course, some of the IPOs are very good. I think Tata Technology and IRAD are both very good. But again, the practical side is that how much are you going to get? The second is, yes, I think we have seen a consolidation phase which has been there for the last few months between kind of a 19 to 20,000 of Nifty. I think we are set to break past this range as we close this year. So even the ETFs could be a good idea. Otherwise, I think the stock-specific opportunities are immense. A lot of sectors, including metals, capital goods, real estate, are showing and not some of the commodities like Shail pointed out, sugar, and some of the chemical stocks are showing very good, breakout patterns. And I think plenty of money to be made both on the primary and the secondary side. I think we just have to be kind of doing a lot of research on the stock-specific ideas. And there are plenty. I mean, the good thing is that the market is full of very diverse ideas and very different ideas, and there is a lot of money making opportunity for sure.
Right.
Right. Good morning, Ashish ji. It's an equal pleasure and honor to welcome you. Mr. Kapoor is a very, very well-known observer and investor of the market over the last 4 decades, and one of the shining lights in Delhi's investment circle. Once again, a very warm welcome to you, sir, on Market Today. Just a very quick point. You mentioned a lot of stocks that provide value at current prices. Where do you think investors can put in fresh money despite the record highs that we are seeing in the mid-cap and the small cap space, sir?
Okay, to begin with, I think let's start with the large cap. I think one very great idea which is languishing for a long period of time and which is actually a no-brainer is HDFC Bank. I think the bank has its long history of being listed. I think clearly showing the worst last 3 year kind of a time frame where it has hardly shown any return. The bank itself is a very, very strong bank. It has reached every nook and corner of India, there's no debate on the kind of model which they have, the kind of sustainability which they have. And I think once the HDFC merger plans get over, I think any investor with a 2 year plus horizon, that's no brainer. It's a large cap. You can buy as much as you want, very liquid. It's also in the futures, so you can even maybe create a future and then keep rolling it if you have that kind of risk appetite. But either way, I think HDFC Bank is something which is a low hanging fruit, no major research required, and can easily be lapped up. Otherwise, I think if you go beyond that, then I think amongst the ideas which seem to be doing very well. We think that even the real estate sector, despite the run up, I think stocks like DLF still have a lot of scope to go further. I think the re-rating is happening with on the basis of the ground reality, which is showing clear amount of traction coming in the real estate market, especially Delhi NCR and the other metros, where both the volume and the prices are showing a lot of buoyancy. So real estate, in which I think my pick would the number one pick would be DLF. Then I think the metals space looks very exciting, and after a long time, we're seeing a very good amount of traction coming in. Here, I think if you can take a longer term view and have faith, then Vedanta looks very promising, because I think once all the businesses get listed separately, there potentially a lot of value unlocking which can happen going forward. The other very clear idea in metal space can be your General Stainless, JSW Steel. There are some of the other ideas, including Nalco. Nalco, I think, again, the way we have seen PSU stocks rush up, Nalco is again, I think, looking very good valuation-wise, and has both the metal, business as well as the PSU tag, which is finding a lot of favor in the market these days. Now, when you move ahead of metals, I think capital goods, in which the large cap L&T, despite the run-up, still looks very interesting. Then apart from that, there are various other, the ideas. There's Linde, despite the run-up, it looks on the face of it very expensive. But I think if we look at the business which they have and the kind of market share which they have and the kind of uses which gas is going to be deployed in going forward in various manufacturing companies,
Right, sir.
in various other uses. So Linde is another great idea which one can look at from a long-term perspective. Similarly, I think chemical space, I think there are plenty of ideas, including Tata Chemicals. Then one the stock specific idea, and depending on your risk appetite, I think even stocks like Vodafone idea,
Sure.
Suzlon, which are coming out of a very long period of consolidation and are turnaround candidates. So if you have that kind of risk appetite, you can go for these stocks as well.
Right. Mr. Kapoor,
Right.
I want.
And for those with a yes, actually, go ahead.
Mr. Kapoor, I wanted to understand just before we hit pre-open, and Shail will take over on that. On Honasa Consumer, do you track this company? The company has reported doubling of its profits in Q2 yesterday, and the company will be in focus. This is the first results after it's got listed as well. On a low base, its profits have expanded. Revenues have increased 21% from last year as well. EBITDA margins are at 8% odd. But do you see promise with the results that have come into this company?
No, Sakshi, I haven't been tracking this counter, and I really haven't looked at the results very carefully, so I won't be able to comment on this one.
Okay, no worries. Shail, anything else that you wanted to spot before the markets hit pre-open?
Yes, let's get Mr. Kapoor's thoughts in much deeper space. As you would have noticed, Ashish ji's picked up frontline blue chips, HDFC Bank, DLF in particular, of course, from the Jindal stable, which is Jindal Stainless. And that's because if you see over the last 1 year, the main index, which is the Nifty, hasn't moved at all, just up 8%. And these stocks in particular have given a sideways kind of a move. Mr. Kapoor, when you look deep down, when you drill into the mid-cap Nifty, the small-cap Nifty, are there still some gems left which may have moved upwards but still provide an opportunity for, say, a 20-25% CAGR over the next 5-7 years?
Yeah, I think there are plenty. Now, only thing is, when you're recommending, you also have to make sure that you warn the investors that, mid and small cap space is more volatile. So do it only if you have that kind of, risk appetite and that kind of experience in the stock markets. But having said that, to begin with, I think a stock like Punjab National Bank, despite the run-up, it has been now consolidating. I think it has it's easily 25% more upside. I see this stock going above 100 in the next maybe 6-8 months. I think the PSU banking space also is getting a lot of traction. They never had this kind of balance sheet strength and this kind of credit growth going forward. So PNB can be one idea you can look at. It has been also consolidating and they looking to break out of the range. The other, there are plenty of other stocks. Again, now, these are ideas which you hold with conviction, but one can look at, for example, Aero Green Technologies, a very, very niche business, looking very strong. And if one can keep this kind of a stock for a few years, lot of scope going forward. Then we haven't, the niche businesses like, for example, the quick service restaurant business, which has the Vianney International. The stock has corrected a bit in the recent past. And Vianney looks very, very interesting, the kind of growth which we are expecting in the quick service restaurant space. The Vianney can be another very interesting idea to lap up and remain invested. But like I said, all these stocks are for investors who have some kind of a risk appetite and are willing to, stay put despite the volatility which will always happen with these kind of counters.
Right. Mr. Kapoor, I wanted to ask you on the auto pack, especially in the large cap space, the Nifty stocks like Eicher Motors, Hero Moto, Bajaj Auto, Tata Motors, they've all had substantial moves in a monthly action. If we see in the F&O space, especially 14.9% higher for Eicher Motors, Hero Moto Corp has jumped 9.2%, Bajaj Auto 9%, another 8.5% move on Tata Motors as well, which is usually not really seen in the markets when we talk about the Nifty stocks, a monthly action? How would you really look at these stocks?
Well, I think the stocks have done very well. While they may continue and likely to continue doing well going forward, but I would not put them in my buying list. I think the buying time in these stocks is behind us, because at the end of the day, this also is a cyclical kind of an industry. I don't see any merit in chasing it after they have the kind of performance which we have seen them do. There could be some interesting ideas in the auto ancillary space, which of course are still looking good. But on these auto majors, I would think that the best is behind us. You can look at some of the spaces which will benefit with the kind of road developments which we've had, and also that some of the auto ancillary spaces. You can look at Minda Industries, the Minda Corp, something like a Motherson Sumi. You could even, despite the run-up, I think Bharat Forge, with the kind of diverse industry, exposure it gives you, those are still better ideas than I think chasing a Tata Motors or a Maruti.
Fair point. Money moves into auto ancillaries after the main OEMs have run up. That's happened over the market over the last 5 decades, and Ashish ji pointed out really well. Let's look at pre-open trades. Nifty flat, down 23, 19,782. Remember, today is the weekly expiry of the Nifty, and therefore flat trade is most likely. Nevertheless, let's pay attention to index heavyweights. I first want to see what Reliance is doing. It's negative 0.2 at 2383. Remember, over the last 2-3 sessions, Reliance has been the cornerstone of the Nifty, rising fairly strongly. And today we see some bout of profit booking, which is fairly normal. HDFC Bank down 1%, 1496. How about Infosys? IT is providing support. Therefore, Infosys at 1470 is up 0.8%. Let's look at the two corporate banks. ICICI Bank down 921.55, flat. Axis Bank is up 0.2% at 1001. SBI is up 0.6% at 562. So as far as the bank Nifty is concerned, the trend is mixed. Remember, it's the beginning of the last week, a fresh weekly expiry for the bank Nifty today, and it's the end of the weekly expiry on Nifty. Apart from that, let's focus on FNO stocks beyond the index heavyweights. So lot of traction coming in. High beta stock IEX up 4%, 148.90. Berger Paints up 1.8%, 580. M&M, it's going to be an auto day again. M&M 1.1% higher, 1561. Bajaj Auto 5815, 1.1% higher. TVS Motors 1% higher, 1754. Let's look at top losers. Hindustan Unilever, Motherson, HDFC Bank, Tech Mahindra. Nothing much happening there. One very quick look at NSE 500. Amongst the top losers, you have top gainers, you have CG Power. Again, after yesterday's 19%, 20% surge, the counter is up 2.2%, 480. The parent Murugappa Group has put in an investment of $700 million to start semiconductor business. So that is the reason why this counter is up. Hospital chains, Rainbow up 2%, 1154. Hospital chain Narnayan Hridayalaya up 1.6%, 1265. Nothing much happening there in terms of how the movement is. The Nifty flat at 19,819, up 8%. This is in sync with what the GIFT Nifty has said as of now. Let's get in touch with Ashish back again. Mr. Kapoor, when you look at the performance of the pharma space, a lot of money is now moving into stocks like Cipla, stocks like Sun Pharma, both of them at record highs. Any mid caps in the pharma space that you like on the long side?
I think yes, pharma is getting back its mojo, definitely, and I don't have any particular mid-cap pharma idea in mind, but I think pharma still has a long way to go, and a good idea would be to look at these ideas, but I don't immediately have any idea.
Okay. Right. Mr. Kapoor, let's actually look at one stock that I was discussing, Honasa Consumer. In the pre-opening action, we are seeing the stock is up almost 10.5% higher, now at 390 odd rupees. So that's important for all the viewers to watch. This would definitely give a breather for all of those people who've been holding the stock from IPO allotment. 389 right now, 10% higher in trade. So a reaction to the earnings has come in. But Mr. Kapoor, if not Honasa, anything from the internet basket stocks that you now are looking at preferably?
Well, I think the way the world is changing and our consumption patterns are changing. I think despite the huge run up and talk of internet-based stocks, I think you still have it may look little wrong to recommend, but Zomato I think still has a lot of scope despite it having doubled in the last what maybe 6-8 months. I think Zomato, I think PB, Infotech, I think even your Paytm, these kind of stocks. Actually, one gets captured in the additional valuation pattern. So these stocks, you would look very expensive, but the way the patterns are changing, I think something like Paytm, for example, can still give you a very very good return going forward. And these are the kind of stocks you have to believe in and buy. And other than that, I think like I said, quick service restaurants are looking good. There are some of the other retail stories also which one should track. I think Trent looks very interesting. Titan also looks very interesting despite the run up. So these are stocks which have given you great returns, but I think they still look very interesting. And my all-time favorite is Tata Consumer, which I've been holding and recommending for the last several years. So I think if the no-brainer is Tata Consumer, if you can just keep holding it for next few years, there is still a lot of money to be made because the company is very large and then a lot of value unlocking which is yet to happen in it.
Fair point, and it's a great pick. Tata Consumer at about 920, 930 levels is also trading at its record high, if I'm not mistaken. Yes, 928, and this is a record high. So long-term wealth still can be made in stocks like Tata Consumer, according to Mr. Kapoor. Before we get into the nitty-gritties in the market, Ashish ji, an all-time favorite is coming back, Bajaj Auto. Record highs here again, and the rally is almost unstoppable. Would you have a view on this one?
Well, I think two-wheeler space is coming back finally, but I would still think that Hero MotoCorp has a better scope because it has more domestic market presence, more domestic market focus, and I think that is where the action is also, and that is also where the earnings are easier to predict and easier to see the growth. So I think both are looking nice, but I think if I have to choose one, I would choose Hero MotoCorp.
Right.
As you can make out from Ashish ji's conversation, Mr. Kapoor is very, very fond of Delhi-based stocks, so Hero Honda. The entire auto ancillary space led by Motherson Sumi, Uno Minda, and of course DLF. So a Delhi wala for you, and there are two other Delhi walas on the screen, and we completely appreciate this sentiment, Mr. Kapoor. Sakshi, over to you.
Absolutely, Shail. Let's discuss some more stocks that are coming up in trade. I wanted to discuss with you Titan, an old-time favorite, which is now at 3 lakh crore rupees market cap, record high levels again. How would you be looking at this stock with a fresh move coming in?
Well, I mean, to begin with, let me also share that there were plenty of other non-Delhi ideas which I shared, including my first pick, HDFC Bank, which is
Yes.
Mumbai-based. Okay, and Titan, I'm happy. Titan also is Mumbai-based, so I'm happy that I can recommend Titan. Titan, like I mentioned, I think a little short while earlier, I think Titan has been a great success. And I really see a lot of scope, despite the run up, a lot of scope because I actually am witnessing a lot of movement, especially in the jewelry business from the unorganized to the organized space with the kind of regulations that have been put in place. A lot of erstwhile consumers who used to go to a normal jeweler are now looking at Titan or similar kind of organized players, that itself is a very big scope for Titan's growth going forward. Apart from that, of course, there are other businesses which we all know of. And the other very interesting thing is that actually, if you think of it, Titan has no rival. I mean, if you look at the spaces which they are in, I mean, if today, if you have to really buy a nice, spectacles for reading, for example, or buy sometimes, jewelry. I mean, there's no one point which gives you all this kind of, all these kind of products, and also the various other products which attract youngsters these days. Titan gives you a range which actually there is no other format and there's no other store which gives you that entire range. So it is that way a very, very unique kind of a business, and you really can't compare it. So it does, I think, in my opinion, it will and is already getting and will continue to get the rarity premium also. So I think there's, despite the run-up, Titan is still looking very good, and it is never too late to catch a great growth story. You can still go ahead and buy it.
Right. Okay, Mr. Kapoor, let me also discuss with you some of the Bangalore-based stocks now, especially in the IT pack. Infosys, for example, that's up in trade and it's been on an uptrend. HCL Technologies, that's up in trade. We've been seeing even the other IT majors like LTI, Mindtree. How would you look at the entire large cap IT basket now? Has the tide turned for them? Are you looking at fresh buys in any of the large cap IT names as well?
Well, you can, I think, as a contrarian pick, you can look at it. I mean, of course, they'll be like, just like HDFC Bank, they will be a little boring because they are not showing any great movement, and you will be feeling left out. But not only are we, I think, Infosys and the large caps, I think. Again, at the risk of sounding very favorable daily-based company, I think HCL Tech actually looks the best out of the large, IT names because of the valuation, and I think the re-rating is on the cards here. So, and to some extent, is happening also already. So, I would think that if you have to choose one out of the larger ones, HCL Tech should be the first choice. Also, I think if you look at it, there are many very interesting ideas in the mid-cap IT space, which are actually performing despite in the headwinds which are there in the sector. I mean, it's stocks like Persistent Systems, I think are doing very well. And I think that is where I think more money can actually be made. And also, if you can, follow the businesses like data patterns and latent, they are looking very, very good and are already given very great returns. So mid-cap IT is looking even better than last.
Right. We have Akshay Bhagwat with us, senior technical analyst at joining us on the screen. Akshay, one very quick stock pick before markets open very quickly.
Good morning, Shailji. Well, HCL Tech from the IT space is what I would be looking at. So, a strong breakout seen a couple of trading sessions back. The momentum is in the IT space. Long additions are pretty prevalent. And this is the sector which is driving the Nifty index up. So, I would be looking to buy HCL Tech at the opening. And I would keep a target of 1375 on this trade. The support for the stock is around 1325. So, my stop would be around 1318.
Okay. With that, ladies and gentlemen, let's look at the Nifty. Markets are ticking on this weekly expiry. The Nifty up 30 at 19,840. The Bank Nifty up 30 again, 43,485. The IT index up 80 points, 32,632. And the Nifty 500 is opening in the green, up 32 points. Now let's look at the pre-open, let's look at the index heavyweights where you see strong traction coming in. I want to first see Reliance. Okay, Reliance at the moment is trading at 2391 flat. How about HDFC Bank? Flat 1511. How about Infosys? Again flat 1460. So you can see that the trend for the Nifty on its weekly expiry day is most likely to be sideways, given the fact that all three of these stocks have opened in the green that is some kind of a sanity. Again, let's look at the two index heavyweights on the banking side. ICICI Bank flat again 924.45 and Axis Bank flat again 998. So the Nifty and the Bank Nifty are unlikely to do anything great in trades today. Okay, let's shift focus to FNO. I want to see what the top gainer here is. IEX 3% higher, 148. Bajaj Auto taking it away 2% higher, fresh record high 58.67. Oberoi Realty 1.3% higher, fresh record high 1400. Berger and Chambal up about a percentage, going strong. Let's look at the Nifty 500 space and then we'll go directly to Akshay. Top gainers: CG Power 4% higher, fresh record high 490. CDSL, the company came out with a statement saying that they are the first company to handle 10 crore active demat accounts, 2.8% higher, 1764. Smart move coming into Uno Minda. This is something that Ashish ji had picked up, nearly 1% higher, 680.65. Let's look at all-time highs and then get to Akshay. CG Power, Bajaj Auto, Uno Minda, Titan and Persistent so far in the first 2 or 3 minutes of the trade. How about Nifty? 34 points higher now at about 19,846, and very, very strong moves coming in apart from the index heavyweight, which is the top gainer on the Nifty. Bajaj Auto 58.65, fresh record high. Eicher Motors 38.71% higher. Asian Paints 0.8% higher, 31.56. L&T, Mindtree, Nestle and Adani Ports are the top gainers. Akshay, over to you. Markets have opened in a fairly strong footing as far as the weekly expiry is concerned. Anything else that attracts your attention at this point of time?
Well, for the index, we are almost at a breakout zone. So 19,850 to 19,875. Last time we reversed from the highs of 19,875. So if this level is overtaken on the weekly expiry day, you can see an accelerated momentum in the Nifty index, which can be a very strong move for the Nifty, which can easily cross 19,900 in the day itself. If it doesn't break today, then probably in the coming week, if this breakout is seen, then the setup is targeting 20,000 plus. So a positive view are maintained on the Nifty index. It's just a matter of time when this breakout is. So let's wait for the prices to surpass the levels of 19,875. Then clearly it's a buy trade for me in the Nifty index. As far as the stock specific action goes, well, auto space might do well here. You know, stocks like Ashok Leyland and TVS Motors have done exceptionally well. Maruti somehow has been a laggard. So I believe Maruti should also speed up soon. And that would be the stock on my radar on the buy watch list.
Okay. Akshay, morning to you. You know, your take on JSW Energy now. This stock was discussed yesterday at 410. The stock's moving up higher in trade again today. What would your next targets be on JSW?
Good morning, Sakshi. JSW, well, JSW Energy, you're talking about JSW Energy, right?
Yes.
Yeah, so JSW Energy 423 is the current rate. Very strong price uptake in yesterday's trading session above the short-term moving averages, long additions in the derivative segment, and the technical setup looks well poised for a target of 442. So buy in JSW Energy is what I recommend. Your support is 410 and the target area should be 415.
Right. CDSL. CDSL, I want to ask you now, you know, of course, like Shail pointed out, 10 crore active demat accounts, and this entire broking space has been on a buzzing trend. Right now at 3.4% higher at 1777, would you still buy the stock?
Yeah, definitely. If you look at the setup in CDSL, a very strong technical setup. It's just that last 4 or 5 trading sessions have been a bit subdued. It is giving a re-entry opportunity, and as I understand, the opening tick has been pretty strong in CDSL. A definite buy for me from the trading perspective. 1700 is the support, and the target should be the recent swing high of 1880. So a buy in CDSL, 1880 is what I would target from the short-term perspective.
Fair enough. Another stock that I'll pick with you very quickly is CE Info Systems. Again, this stock is also up in trade in the opening trade, and board of directors are actually meeting on November 27 to discuss a proposal of raising the funds with the issuance of equity shares. So the stock is 5.7% higher, 2306. Would you look at this stock favorably?
Yeah, from a trading perspective, yes, CE Infosystems has a strong technical setup. The support area is roughly around 20 to 70 odd levels from a trading perspective. 2375 to 2390 is what this stock should be heading for. So, buy is what I would recommend in CE Infosystems.
Okay, it's now 9:20, almost 9:21 actually. The Nifty is fairly stable, up 30 points, 19,842. Bank Nifty is flat at about 43,400. A good time as any to look at the broader market. Advanced decline ratios are 1400 in the green on the National Stock Exchange compared with 400 in the red. So at the moment, a 3:1 kind of a market favoring the bulls. Okay, there is a breakout as far as the Nifty is concerned. It's now above 19,855. And what are the stocks that are contributing to this one? Just a moment, I think this one needs to be looked at, because you have the first resistance at 19,850. Just a moment, let's pay attention to the Nifty first, which is the top gainer in the index heavyweight. Okay, Bajaj Finserv, it's a minor player, 0.6%, 1634 in terms of index heavyweights. ITC, 0.5% higher, 441.60. Bajaj Finance, 0.4% higher, 71.59. SBI, HDFC Bank is now gaining ground, 0.3%, 15.17. How about Reliance, 0.2% higher, 23.93. So the good part, Sakshi, is that all 10 index heavyweights are in the gain, although the gains are pretty minor. So this is how the markets are, 19,850. Let's touch base with Akshat, and by which time the PCR will fire the 19,800 November 30th call for the Nifty. Remember, we are now on weekly expiry day, so it makes sense to look at the next week. Akshay, over to you. 19,800, does it make sense? It's priced at 76 rupees at the moment.
Yes, definitely, Shailji. It does make a lot of sense to go for this call, considering the fact that we are almost about to surpass a breakout zone. If it does surpass, you can see a strong momentum pickup in the Nifty, which can easily see Nifty heading for 20,000 plus in the coming week in the monthly expiry. So, a small risk, as I see, because we are buying options, so your risk is limited to the premiums you pay. In case you are looking for a stop loss, in case the market reverses, then what is the question? Then 19,800 is the stop loss basis spot, is what I would keep on this trade. And if this 20,000 plus levels are crossed, then easily this can be a doubler of premiums from the current level as it trades.
Okay, so 19,800 for November 30th. Remember, the most recent high on this one was 210 rupees. At the moment, it's available at about 161. And of course, in the morning, it was at about 107. Strong moves coming in into the entire Nifty space. You have Reliance at 2396, Bajaj Auto at 5903, L&T Mindtree, TVS Motors, Hero Motors, Eicher Motors, all of them are now at the day's high, and that's the reason that you see fairly strong traction coming in. One very quick view, Akshay, on Bajaj Auto.
Bajaj Auto, well, it's almost just sailing and cruising past its lifetime highs and creating new all-time high levels. As I see, it is a bit overstretched on the trading parameters. The medium-term targets are still higher, but if you are considering a fresh buy entry here, then I would suggest consider other auto names. Probably a Maruti, a Hero Motocorp, and Eicher Motors would do well. The broader target I see in Bajaj Auto at the current rate is somewhere around 5925. But for fresh long entry, I would suggest if you get around 5750, that would be a good level from a risk reward payoff to take a fresh trade in Bajaj Auto.
Okay. Mr. Kapoor, let's get you in as well. I wanted to ask you on Bharat Forge, and what is your view here? Since the OEMs you're avoiding, you're big on auto ancillaries, but those with an inclination to defense as well, how would you be looking at the stock? Right now, the stock is moving up higher, 0.6% up in trade at 1103. Would you be looking at this stock positively?
Yes, I think I did mention Bharat Forge also. I think the stock has a lot of scope, not only as an auto ancillary player, but the broader engineering and also of course, the great opportunity which is coming in the defense space. Good thing is it's coming on the back of very solid performance over the last few years and a very great, very solid consolidation which the stock has done in a range for a long period of time. So I think there is definitely a great room on the upside.
Okay. Akshay, what would your technical view be on Bharat Forge? Is there a trade here you'd recommend?
Well, Bharat Forge, yeah, the technical setup is definitely strong. It has reversed in the last few trading sessions because it was a bit in a downtrend since the month of October. As I see the targets for this workout to around 1130. These are trading upsides which I see in the next 4 to 5 trading sessions. So a positive view for Bharat Forge. The support zone is 1090 and the trading targets are roughly around 1125 to 1130.
Right. Okay. Apart from this, Mr. Kapoor, I also wanted to take your view on the entire, public sector enterprises space as well. PSU basket has also surprised in the recent run-up. Maybe you take the energy names like NTPC, Coal India. We're now seeing a lot of, the shipbuilder names, Container Corp, all of them moved up higher in trade. We're also seeing the gas names like GAIL also perform, HPCL, BPCL now. How would you be looking at this entire public sector units basket and any particular specific area or segment that you're bullish on even now?
Well, I think very favorably. The re-rating is for sure there, and some great movement has have already happened. But I think there's still time to catch up with them. NTPC, I think, despite the run-up, looks to be very interesting, and still they're having a lot of scope to give you more returns. Then the Nalco, which we discussed, I think Nalco is available at a very good valuation. The metals as a sector also is likely to do well. So I see a good amount of return which can come. Nalco, then public sector banking space, of course, which we discussed, I think still has more scope. I think for some time, BEL has been lying kind of low. I think there should be some energy coming back to this stock as well. So these are the couple of stock ideas which I think you can still look at in the public sector space.
Okay.
Right. There is something that I need to mark on Bharat Forge, and for those who were with us in yesterday's closing session between 2:30 and 3:30, we had picked up the 1100 call for Bharat Forge expiring in November 30th. To you, Akshay, if you could take a view, we had marked it somewhere like 15 rupees. Now, of course, it's screaming up 17, 18 rupees higher. Any view that you would have on this one, Bharat Forge 1100 call for the moment?
Yeah, so Bharat Forge, as I mentioned, is heading for targets of 1125. So if those targets are hit by Friday, then there's a good chance that 17 rupees can easily move up to around 22 to 24 roughly on the premium front. So positive setup, you can consider carrying it forward till Friday, because then you get into the expiry week, and you also risk of time depreciation if you carry the trade over the weekend. So till Friday, I would recommend hold the trade in Bharat Forge. If you have 1100 call, 23.25 is the option premium you can target with considering if Bharat Forge hits the levels of 1125, which is the target price I recommended.
Fair point, and this is a wonderful suggestion coming in from Akshay. Don't carry the option trade over the weekend, especially in the last weekend of the monthly expiry. Remember, we had talked about faster time decay, and more importantly, Monday is a holiday. So if you get into this trade, this is only worth till Friday afternoon, if not earlier, if the price target comes. Okay, what is ticking very well? Paytm, days high 923. Let's look at the chart in front of us. Okay, 4 days of gains, about a month high as far as Paytm is concerned. Nothing much in volume, but it's Hero Motors that is gathering attention. Akshay, what would your view be on this one? The rally is now there for the 8th day in a row. Is this sustainable? What should one do on Hero Motors?
Hero MotoCorp, if you're looking from a short-term perspective, then it's nearing a resistance zone. Roughly 3500, 3520 is where it might be slightly vulnerable for temporary profit booking. So this would just be a temporary stopover for Hero MotoCorp at the levels of 3500. That's valid for the next 3 to 4 days. Otherwise, broadly, as you understand, the chart structure is extremely strong. And with a 15-20-day trading perspective, I see this stock heading up till somewhere near 4,000. So be invested. You can even consider buying if your time horizon is slightly longer. 4,000 is what I would look for in Hero MotoCorp in a 1 month time frame.
Okay. Mr. Kapoor, I wanted to draw your attention to the fertilizer stocks as well and take your view there. Fertilizers and chemicals, Travancore, that's up in trade today. We also have Gujarat Narmada Valley Fertilizers, that's up in trade. Deepak Nitrite, Gujarat State Fertilizers and Chemicals is up. Chambal Fertilizers is also up in trade. A lot of these fertilizer names are actually ticking higher. How would you be looking at this space, sir?
Well, I think the stock which I think still looks very interesting and I can recommend is Deepak Nitrite. I think the business model here is very, very robust, and the stock has gone through a fair bit of correction consolidation. So I think a very good time to and a good idea to buy at this stage.
Okay. Anything that looks promising to you, Akshay, as far as the fertilizer space is concerned? Any trade here?
Here, I would look at Chambal fertilizers because if you look at the slightly broader term charts with a slightly longer term horizon, maybe a couple of months view, a clear basing formation is pretty apparent at the levels of 265 to 270. This stock has taken a very long time, almost you can say over 7-8 months to form this bottom, and is now launching itself for the momentum uptick. So I believe the targets of 375 to 400 is what you might see in Chambal fertilizers in the days to come. So I would recommend Chambal fertilizers as the top bet for me in the futures and options space with the targets of 400.
Okay, Chambal fertilizers is also out of the F&O ban today, and that is why you can actually see the momentum building up into the stock as well. And here Akshay is also giving a positive view too. Right, apart from this, Akshay, on Indian Energy Exchange, would you have a view? It's the top mover on the F&O space. Any particular targets you'd like to share here?
IEX, well, it's been a gap up for IEX today, and as I see the first 15 minutes of trade, there is profit booking which is apparent looking at the screen. So there might be some profit booking considering the fact that the stock has almost had a one-way rally from 125 to 150 levels. So a slight dip till 143, 145 cannot be ruled out. I would suggest that you wait for a slight dip for re-entry into the stock from a trading perspective. 140 to 145 is the range where you might consider accumulating IEX. The targets look for an upside of 157 to 160. Time horizon maybe 15 trading sessions is what I would give for these targets.
Right. The other interesting point, Akshay, I want to raise with you is that we are in the last week of the F&O expiry, and of course it's been a fantastic rally on mid-caps, the Nifty as well as the Bank Nifty. When you look at rollover data, what are the stars, potential stars that might outperform in the F&O space in the December expiry?
Well, Shailji, one thing was that in November, primarily the rally which kicked off the first initial 300 points of rally in the index was majorly on short unwinding, because if you recollect, October was a very negative month. A lot of short bets were rolled to the month of November, and in the last few trading sessions, as I understand, if I look at the rollovers and the kind of data which is slowly playing out for the December series, I believe auto space is one space which you can consider where significant long bets are slowly picking up as we near the expiry week. So here specifically a couple of names which I have on my mind is Maruti, which has been a slow mover till now. I expect it to pick up soon. Hero MotoCorp should do well in the month of December also, and Ashok Leyland and Tata Motors. So these are the four names in auto space which I have on my buy list, considering the data points which I have in the futures and option segment as we head into the December series.
Okay. Right. Akshay, I wanted to draw your attention to the real estate stocks now. I mean, the Nifty Realty is the top moving index today, 1.1% higher, sectorally speaking. Prestige Estates is 3.3% up. Mahindra Lifespace, Sobha, Phoenix Mills, Oberoi Realty, Macrotech Developers, they're all up in trade. And in a while from now, we will also be speaking to Shriram Properties as well to find out what the latest buzz is as far as the real estate space is concerned. But any particular trades that you'd like to recommend here for the short to medium term?
Well, Oberoi Reality from the futures and options space is one stock which comes to my mind in the reality space, where it's been slightly consolidating in the past three trading sessions. The volumes have been exceptionally well in the last 4 to 5 trading sessions. So I'm assuming these are more of long bets which are slowly building up. So this consolidation phase of last 3 days should give away soon, and you might see targets of around 1500 to 1525 in this expiry itself. So I would have Oberoi Reality on my buy watch list. Support is 1370 and target would be roughly near 1500 for trading in Oberoi Reality.
Okay. Right. Akshay, one more stuff that I wanted to discuss with you is Balkrishna Industries. That's also moving up in the F&O space. We've been discussing the auto ancillary space. Now the tire space as well, which also has had a good recent run as well. How would you look at Balkrishna Industries at the current levels? Is up by 2.7% higher in the F&O space right now.
Balkrishna Industries, if you look at the chart structure, 3 trading sessions back, the buyers just got you can see a reality check because, there was a sudden fall in this script right from 2700 to around 2450 odd levels. So a significant selling, long unwinding in the F&O space, and now the stock is slowly trying to regain its lost ground. So I would rather be interested in chasing the momentum names here rather than going for Balkrishna, because this stock, although is poised strong from a medium-term perspective, short-term, because of the sell-off which we saw 4 trading sessions back, it might take some more time to regain its lost ground. So right now, as I conclude, 2480 is the support. It will take time to gradually move up. Right now, 2480, 2600 is the range which I see in Balkrishna Industries.
Fair enough. We'll take a very, very short break right here. Akshay, stay with us and we'll be back to discuss a whole lot of stocks that are buzzing in trade. So do stay tuned with us on Business Today Television.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. It's a fairly robust opening. We are at 940, and despite it being the weekly settlement for the Nifty, it's a 50-point uptick at 19,864, and fairly strong short covering is coming in ITM calls as far as the Nifty futures are concerned. The Bank Nifty about 120 points higher, 43,570. The IT index at 32,660, up 93, and the mood in the broader market via the NSE 500 is also fairly good, 56 points higher, 17,682. Since all of us sort of enjoy 52-week highs and stocks that are making record territories. Just let me mark a few that we've discussed so far. Balrampur Chini 458, although it's in the red, but still it's at a fresh 52-week high. We have Quest Corp from the Midcap IT space up 6%, 520 in front of you, 13.8 lakh shares have been traded. Prestige Estates from the real estate space up 4%, 941, 3.6 lakh shares have been traded. These are the ones that are sticking to the 52-week high list. Let's look at volume buzzers. You have Hope First Finance, a block deal happening here. The counter down 3% at about 886.70. About 12 lakh shares have been traded so far, 14 times volume. CG Power remains the top draw. Mild profit booking, 1.6% lower, 461.70. Remember, the stock was up 20% yesterday. 2.8 times the volume, 86 lakh shares have been traded, and it's just 942. You have IEX, a blowout happening there. This is a power exchange, 147.95, up 3%, and already 1.66 times volume traded. Akshay is with us. Akshay, the chart for IEX laid down in front of you. What does it tell you? Is this momentum likely to continue?
Well, yes, the momentum should continue from a positional perspective. Today, it's been more of a gap up, and there's been slight profit booking post the gap up. So, you can wait for a slight dip till 145, which I believe should be an ideal level to re-enter the stock on the long side. Technical structure, definitely positive. From a trading perspective, 160 should the targets you should be looking for in next 10 to 15 trading sessions. So a positive view I maintain on IEX. If you have hold it for fresh entry, 140, 145 would be the right entry level to get into this stock.
Okay, fair enough.
Okay. And there is something that, Sakshi, just a moment please.
Sure.
Just a moment please. There is something that I'd like to mark on the screen, and that is the SBI ETF for Nifty. At the moment, the ETF right in front of your screen is trading somewhere like 207.16. Yes, this is the ETF that we are talking about, and this is something that we had highlighted on Market Today on somewhere in the late part of October, when this one was trading somewhere like 195, 196, and the view was that the sharp dip in the Nifty can be bought with a relatively riskless trade, which is going through the ETF route and trapping the subsequent rally in your favor. So at the moment, what was purchased for 193 rupees is 207.16, and if Akshay is to be believed that a fresh momentum is likely to be in the Nifty in the month of December, then this one will head fairly higher. Akshay, your view on the Nifty once again, 54 points higher, 19,867.
Yeah, so almost near the breakout point, because last time, the tops made was 19,875 to be precise. The momentum is in today. Once 875 is surpassed, there will be strong uptake. And today, especially being the expiry day, it is more vulnerable to that up move in probably in the second half of the day, where we'll have to keep a watch. Even if it doesn't happen, the broader chart setup definitely is suggestive of Nifty re-aiming for the all-time high level. So the SBI ETF which you spoke of should have some more gains to go in the coming days. So definitely should be on your buy watch list, and the target areas much work probably around, I think 215, 220 is where this should be heading for.
Okay, fair enough. Akshay, just quickly wanted to draw your attention to the shipbuilder stocks. Cochin Shipyard is definitely one of the top movers in the Nifty 500 basket, up 4% higher in trade. We're also looking at 1.5% kind of moves coming in on Mazagon Dock, GESE, that's Great Eastern. We also have Shipping Corporation of India that's up in trade. So all of them are buzzing, and they're moving towards the higher point of the trade so far. Your own sense of how would you be looking at these fresh momentum that is now being built up again?
Yeah, the shipping stocks are back in action, as you rightly said, and a couple of stocks which I checked right now with the names you mentioned here is Mazgaon Dock and Shipping Corporation of India. Corporation of India is currently at its support 130 to 133 and is all setting up for the upside swing high of 145. So from a risk reward payoff, it's a very strong buy because your risk is only till 129, which is a stop loss, and your buy will give you a target of 145. So by Corporation of India, and if you look at Mazgaon Dock, that's the other name I have. A stock which is known for strong up moves when it happens, has been subdued, has been in its shell for a long time, and the day it moves, it's going to rocket. So I think the support base, as I see, is 1948 to 1950. You can buy it below with a stop below the support. If it rockets from here, your targets can easily be around 2125 to 2200 on the upside.
Fair enough. Well, on that note, Akshay, thank you so much for taking the time out and being with us on this special edition and discussing all the stocks like you always do. Always a pleasure having you with us on Business Today television, and hope you have a great trading day. And now let's shift focus to our corporate radar section. And like promised, we are now going to be speaking to the top management of Shriram Properties. Murali Malayappan, the chairman and the managing director of the company, now joins in with us to discuss more about the Q2 earnings and the outlook on the business is concerned. Very good morning to you, Mr. Malayappan, and great to have you with us on Business Today television. I'm Sakshi, and with me is Shail Bhatnagar. And before we start off by discussing what your key earnings have been in Q2 and what is the guidance that you'd like to give forward, we've just crossed the festive season, the peak season for sales in the real estate space. How have you really seen the kind of sales momentum that you've clocked in, and how was it vis-a-vis the previous year? And probably if you could also tell us vis-a-vis the previous pre-COVID levels as well, how has the momentum grown?
As you know, the market has been extremely buoyant and doing phenomenally well. There is a big demand which is piling up now. Typically for real estate, H2 is as you rightly said, post-festival period. H2 will be a much bigger number. As an organization, we have done about 1.9 million square foot sales in H1, and year target is about 4.8. We'll be comfortably reaching this target. In terms of delivery, we have delivered close to about 830 units, roughly about 1.8 million square foot in H1, and H2 we are on track to deliver another 2.56 million square feet and about another 2,500 units we expect to deliver in H2. Everything is on track. So business momentum is good, growth momentum is very good. We are pretty confident next 3 years time, things will be very, very positive. Particularly there is a general perception that during election period, whether there will be slow growth in momentum, which I don't believe in that. I strongly believe that there is going to be a bigger growth in H2. And not only that, post-elections, it is going to be next 5 years. It's going to be a much bigger growth is what we are gaining up altogether.
Mr. Malayappan, you just talked about how you're going to be delivering 2.5 million square feet of residential space by FY24. What are the kind of sales that you're eyeing with this kind of a sale, and in which quarter would you see the peak potential come in as far as your revenues are concerned?
Generally, Q4 is the most promising one compared to Q3. But Q3, Q4 will be more. Both the quarters will be really good for us because post Diwali, everything will start now, and Q3, Q4 will see a bigger growth. We also expect to have a sales revenue of close to about 2,300 crores this FY24. We are on target to achieve. All the projects are fully lined up. For example, delivery, most of the projects are nearing completion now. Whatever the projects are targeted for delivery in FY24, hopefully by December, half of the project will get completed. January, half of the project will get completed. So March, looking very bright for us in terms of delivery timelines and numbers.
Right. A very warm welcome to you, Mr. Malayappan. Shriram Properties has mostly been a south-based player, concentrating on cities such as Coimbatore, Visakhapatnam, Bangalore and Chennai. Given the fact that there is universal demand for middle-income housing across the board in India, are there any new geographies that you plan to add over the next 2 or 3 quarters?
We have presence other than the cities what you have outlined. Calcutta also we have large presence. We have very large township coming up in Calcutta is doing phenomenally well. That is particularly mid-market and affordable housing segment. We are looking at expanding into Pune. We see a lot of similarities between Bangalore and Pune in terms of customer behavior and demand. And also Shriram Properties has got a huge client base in the group overall. So there is a bigger advantage for us to expand into Pune. Hopefully before this year end, we'll be launching a project in Pune. So we are already geared up. And as you rightly observed, mid-market segment, according to me, that's my pet subject. Next 20 years, the demand will not come down. Luxury, there has been a good demand, particularly post-COVID. There has been a very, very good demand. All the luxury projects are doing phenomenally well. But luxury, I mean, has the capability to go ups and downs. Whereas mid-market segment, which is likely to continue in this country for the next 20 years, and there won't be any issue on the demand. And the new geography like Pune will be expanding. Bombay, we are steady, but we are not made up our mind yet. But I mean, Bombay also we could potentially look at again mid-market segment. And Shriram has got its own base and client base, so we'll be tapping into it and take advantage of the situation.
Right. We've seen a fairly sharp increase in the net margin, somewhere to the extent of 500 basis points to 13.4% year on year. What would be the reason behind this, and is this something which is sustainable, Mr. Malliyappan?
Yeah, it is very much sustainable because of the consolidation which the industry has gone through. There are few things which are happening. One side, there has been a strong demand, strong momentum of growth. Country is doing phenomenally well. On the other hand, market has gone through serious consolidation, particularly post-RERA now. So only select players in each market. For example, every market if you take, just top 10 players catering over 80% of the market demand. So there has been a huge momentum for the growth, and I expect the prices to go up further. So we have seen about close to about 14% price increase in the H1, and we expect this to continue. May not be 14% in H2, could be at least 5-6%. But post-election, I expect the prices to jump phenomenally high.
Okay, so you're saying 14% is what we've already seen in H1, and you expect another 14% in H2.
Another 5-7%.
Another 5 to 7%.
During H2.
And in, after general elections, what is your expectation then?
Market is going to be in a very different scale altogether. Maybe, as Prime Minister envisions, he becomes a Vishwaguru for the world, and Indian businessmen can do a lot better and do phenomenally well is our hope, and we are gearing up for that.
So how, what would you peg this increase in prices to? Is it like the huge demand that you're looking at right now? And with the increase in interest rates, has nothing really been on the flip side, on a headwind side as well?
See, if you look at the Indians per se, historically, we use our equity money or capital, our own capital for any home. If you look at the debt to equity ratio on any home buying, India is at the highest in terms of equity utilization compared to any of the Western countries. Western countries, you can say equity is about 1% and 99% is debt, or that formula. Here it's the reverse. I would say more than about 60-65% is equity contribution by the home buyers. 30-35% is the debt. So we are not dependent only on debt as a nation because it's a culture of our people. So now in the last, particularly post-COVID, you asked a very important question. Post-COVID, the savings mentality we have come back to again. Our Indians have come back to the saving mentality, and also the earnings have gone up in the last 3-4 years. So the disposable income for the people have gone up significantly in the last 3-4 years. Combined with saving mentality has come back once again, and real estate is the one most preferred option for any woman in this country. And our country is a woman-led society. Though we can talk about men-led society, it is wrong. But it's woman-led society. Woman takes all the important decisions. Men only support the decision. So woman is comfortable with, unfortunately, not much with the stock market. That's the reason you see the allocation is far superior in terms of real estate and gold. So this will continue at least for next 10 years is my view. I don't see any change. Hence, the price increase is, inevitable for the next 3-4 years.
Mr. Maliappan, I completely agree with you. Men only arrange for finances and execute the decisions that the women of their homes take. And I take it that you are in the same boat as me. So 100% agreed on this one, sir. And Sakshi is on this.
She's smiling all over.
Also amongst the women who. Right, sir. Right. Perfect. So this is a very wonderful observation that women choose the house that men pay for, and that's the reason why you see phenomenal demand coming into the housing sector. Mr. Maliappan, I'd like to ask a fairly rhetorical question, which is that Shriram Properties started with an IPO of 118 rupees. This was about 18 to 2 years ago, and it's been a disappointment for long-term shareholders. Because you are still below the IPO price despite fantastic performance. Is the absence of a luxury project or luxury business in your overall offerings one of the reasons that the stock has not caught the fancy of shareholders who'd like to ride the real estate space?
We need to look at the contextual. See, today market is slightly different on the IPO. In the last 6-9 months time, what we are seeing in the capital market is very, very different compared to when we are looking at the listing. When we are looking at the listing, 21 December, we looked at, just before our listing, Rakesh, you know, the backup, the insurance company had a serious debacle. Then, other e-commerce companies which had Swiggy, Zomato, all kind of, Paytm, all crashed. So when we were about to do the listing, so one is, the market sentiment was so bad on the capital market, and real estate after about close to about 10 years, ours was the first real estate IPO which has happened after about almost 10 years. So before that, there were a lot of people in the real estate space attempted, could not succeed. So we have created the success in hitting the capital market. But unfortunately, that day, market was not good. Hence, the stock opened at a much lower price. One. The second one is we had 58% pre-IPO, before listing by 4 large private equity players. What I understand, market perceives that as an overhang. During listing, they came down to 35%, but still market perceived it is an overhang. Hence, there could be an issue. Nothing to do with the business. If you have seen last, post-listing, quarter on quarter, the company has delivered. And we are in a market where there is a strong demand, and this will be a continuing demand. And Indian investors are one of the most smartest investors. They understand. So they may like to own a luxury home, people who are rich, but they may like to invest on the mid-market segment where there is a real long-term potential. So I'm sure the market, people in the market are extremely intelligent. So we are in the market where there is constant demand for the next 20 years. So hence, I don't see any reason for us to shift our gear to shift into luxury segment. I don't think that will be a game changer. But as you've seen that our stock, since whatever the listing day, has performed almost about 80% growth in the last about 1 year. So market started recognizing what we are doing now, and also the overhang more or less over. Now they have got only one TPG pending now. They hold about 10%. Rest all new investors. They made, I think, series of money. One investor who came in and bought out Wall Street Capital almost has seen 90% increase in the last about 12 months time. So it's a cycle. So we are in the right cycle now. We are in the right momentum. As an organization, we deliver in there's a clear path for the company to deliver in the next 3 years time, and projects are fully lined up. We are on the right track, and as you rightly observed, we are expanding to other markets like Pune and maybe Bombay. So with which we'll increase our growth further. So we are fully equipped to take the company forward to much greater scale. I am sure capital market will reward adequately our appropriate is our need.
Fair enough, sir. Well, Mr. Malayappan, on that note, thank you so much for sharing all these valuable insights with all our viewers. All the very best to you, and we shall hope to catch up again to understand more about the real estate trends and the company's insights and the business growth strategies going forward too. With that, let's get back to the markets. The markets are ticking higher, 19,845 right now for the Nifty, at about 33 points higher in trade. We're also looking at the Nifty Bank now contributing about 0.3% higher in trade is what we can spot the Nifty Bank at 43,597. But as far as the top movers on the Nifty is concerned, it's the entire auto pack that's really in the driver's seat today. Bajaj Auto 3% higher, Hero MotoCorp 2.5% higher in trade, Eicher Motors again 1.5% of an uptick can be seen for this one. And apart from this, we also have some stocks coming in from the IT and the banking names as well. So IndusInd Bank is recovered, that's in the positive zone. We have Wipro now taking higher in trade, Adani Ports, Nestle, these are the other movers in trade right now. Among the sectors, it's the realty, the small caps, autos, private banks and the PSU banks really ticking higher in trade. The healthcare stocks are seeing some profit booking. That's the only index that's in red. Rest of the sectors are all up in trade. The F&O action is also robust. Deepak Nitrite now as a top mover, 3.3% higher. One of the top picks that's suggested by Akshay as well in trade today. And as Shail was pointing out, this is a day when we will see CDSL tick higher and 5% higher for this one. CE Infosystems, IEX, fertilizers and chemicals, some of the top movers in the Nifty 500 basket as well. Well, on that note, we will end this special edition. Many thanks, Shail, and thanks to all our viewers for being with us on this show. But do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.